Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, May 8th, 2023. It's now the 6th. We start off in the S&P 500 daily chart and DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 3 count. And to negate that for end of day, Monday the 8th, there must be a close above 4119.58 for the price flip to the sell setup count 1. And with the close at 4136.25 end of day Friday, that starts the day above that level and could have the price flip to open. We must give it till the end of the day to see if it holds. Friday the 5th's price action had a high above the disqualified 50% momentum up and then closed underneath it. The only level in danger of becoming qualified for end of day Monday on the 8th is this trend factor down 1. And to get there, it would have to go through the conversion line and baseline, which have narrowed the gap by the baseline, climbing up towards the conversion line. So it won't take much to get through both of them. And then if it closes under this disqualified trend factor down 1, that level will become qualified. And as suspected, this qualified demand line was qualified canceled by going back above the level where it ended at 4087.37 after qualifying it with an open below it and a close below it. The next day on Friday, price went right back above it, so that canceled that line. And if you've noticed megaphone pattern missing, I have it switched off. See Friday the 5th's video for megaphone. And price would need to open above this ongoing supply line for Monday the 8th. And this level is at 4186.20 to start the day. The one right above it is at 4191.16 to start the day, Monday the 8th. And if price can do that, open above those 2 levels and close above those 2 levels, then they will become qualified. And if they open below those levels and subsequently close above those levels, they will become disqualified. And if we were using the calculation for the low on the bar on the 5th, then a simple close above these supply lines would get them qualified. However, we have to use the true low because the bar before the 5th on the 4th had a close lower than the low than the bar on the 5th. So this bar on the 4th's close is the true low to calculate it. And here's a last look at the daily chart with megaphone switched back on. You can see the start of the one over here that ends with the 6 up here, and the start of the one over here that ends up with the 6 down here. And again, we're going after the 7 megaphone end counts, and the 7 will print on a tick higher here and a tick lower over here. And again, in the case of the one up here, if it prints the megaphone 7 end count, it's really not going to mean much until we get some other DeMark indicators to corroborate it, such as the 13s. And we're light years away from printing any 13s. There's been more price flips along this run here than Carter's had pills. The S&P 500 weekly chart looking back to the COVID crash era. I will zoom into the current area now. And there's no price flips here for the past 7 weeks, going back to the start of this combo and a sequential aggressive sell setup 1 count. However, for the past month, it's been walking a fine line with closes pretty close to each other for each week. Now for this coming week, end of day Friday, there must be a close above this close on the 9th to continue the sell setup count. It will print an 8. So a close below this puts the sell setup count 8 at risk. And if we lose that, then we have the price flip, and that's really disappointing when that happens, when it's up that high for that long. So we really need to print the 9 end count for the weekly to have any chance at continued upside. And it was certainly disappointing not to have the propulsion momentum up for both 50% and 100% not qualified and confirmed for this week's bar, as there was a higher close for this week, followed by a lower close, followed by a higher close above the levels in question, these momentum up levels. But then this past week did not open higher than the close of the week before over here, so that ended that. And even if it did open higher than this close, it would have ended the week below the close and below the level, so that ends that right then and there too. So it's imperative that the sell setup 9 end count prints. If not, I would start looking for some downside levels for support. And it looks like very good support here at the conversion line and channel 3 low around the 4,000 level. So in the perfect world, in this weekly chart, if price can just get above this momentum level and qualify it later on the fly and print the 9 end count, that would be one good thing. And then ticking higher than this high over here on the 29th at 4195.44 will print the D wave up 3, and then at least we'll have our higher highs in the weekly chart. And the lower low would be on a tick lower than this low on the 12th bar, and that level is at 3808.86. So that's the range, if you noticed in the big board chart. I think we'll go take a look at that later on a little bit more in depth. The NYA top color chart shows the NYA to SPX ratio, basically value versus growth, going sideways pretty much for the week after taking a downturn here, meaning growth was trouncing value. So there's a purple dashed line here that it's been hitting a couple times, one here, anchored back here. And that's what I would usually do, is anchor it there. I have another one from back here. So if growth breaks through this dashed purple line and hits this red dashed line, that would be unusual, but not unheard of in this day and age of unusual things happening in the markets. But from the previous video where I showed the weekly new high, new low for the NASDAQ 100 Big Fat Cap Mega Tech Index, I don't think it's going to be busting through this to the downside to tag that. Please see that video for an explanation of that glaring divergence. The New York AD line has been drifting lower. We can see it better in the thumbnail. And it stalled for getting back above its green 50 EMA line here. Kind of nailed it right there and stalled. Let's see what happens there. The 200 in red is under that and resting right on top of this uptrend line in blue, so you would think there'd be pretty good support there wherever that NYA price would be at that time. And the ratio adjusted McClellan breadth oscillator is still below zero at negative 12.76, and looks like it's stalling under there. It had a whipsaw going back above zero and then promptly went back down. And NYA price fell back to this big W breakout candle right here. So I moved that green line for the potential start of a head and shoulders pattern. So this would be the left shoulder here, as signified by this solid green line that goes right across the top of the measure rule where that big W broke out. The ratio adjusted McClellan volume oscillator looks the same as the breadth oscillator, and the ratio adjusted summation index of the ratio adjusted breadth oscillator is still holding its own, but sinking a little closer towards zero. It's at 76.65. It would have been nice to stay around the 200 area, but it definitely sank with all these downdrafts from the past week. So everything has been doing poorly. And the ratio adjusted summation index of the ratio adjusted volume oscillator is even worse. It's at 40.40 positive, getting pretty close to zero. This really needs to stay above zero and head back up again. But once it forms this mound here, it has a really rough time of tracing it back up for both of these. There's not too many instances of that lately. You would have to go back pretty far. So I think it's destined to go back under zero. RSI 14 is struggling to get back above the 50 equilibrium line. It closed the week at 49.87, and the 21 EMA is right there at 50.96 in blue, so it's going to have some trouble there. That would definitely be a show of strength if it can blast above the 50 line and that 21 EMA signal line. The on-balance volume is deteriorating. It's kind of just drifting lower. It did fall back below this falling peaks trend line here, and will hopefully be good support down here where the other one nailed it twice back here, the other downdraft, and then bounced up. So something to watch. And the New York stocks only AD line here has an arrow pointed down, and the ratio adjusted McClellan breadth oscillator for the stocks only AD line has an arrow pointed up, so a bit of a bullish divergence there for breadth. It's really the AD line that's the best one when there's a bullish divergence showing from the AD line itself versus the breadth oscillators. But nonetheless, over here the oscillator shows a bullish divergence too, slight upwards trajectory. However, the volume oscillators moving averages in blue is a 19, a red is a 39, shows no divergence there, and this is the stocks only, and this is the NYA volume up here. And there's no doubt that traders and investors have been pouring into the market for the last couple of days, so I can see why this stocks only breadth oscillator is pointed up like this. Same with volume. And oh well, the intermediate term volume oscillator for the NYA made it down below zero. I was kind of looking and hoping to see if we could end up with a pattern like this where it stays above zero for a while, but no, it's back under. It does want to hook around back up, it looks like. Same thing with the intermediate term breadth oscillator below zero. looks like it wants to try to hook around and head up. And the instruments above their 200 period simple moving average in the NYA fell out of the 50 to 60 zone this past week. Tried to get back up above it, came back down. It's now in between the 40 and 50. So I'll take it if we can just stay in there and go sideways for a while without dropping below 40, as I don't have any more zones underneath there until we get back down to the depths of despair at 20 again. The NASDAQ Composite Overbought Oversold Indicator chart also has the NASDAQ Composite Ratio Adjusted Summation Index on the top and the NASDAQ 100 Ratio Adjusted Summation Index on the bottom. And just by looking at them, that's self-explanatory. The NASDAQ Composite up here is doing very badly, and the NASDAQ 100 down here is doing very well and holding up the entire market system. And the NASDAQ Composite Overbought Oversold Indicator shows the 30 EMA in green still trying to get back to zero, along with the 10 simple moving average in dotted red. So this is definitely not a reflection of the NASDAQ 100 AD line, which doesn't work for this overbought, oversold. So we have to look at the NASDAQ Composite and make our own summations. However, I want you to focus on the 30 EMA in green. Now this is not the NASDAQ Composite AD line. It is only the 30 EMA moving average line, and the AD line is invisible. Now I'm going to switch over to the NASDAQ 100 AD line, which is the AD line and no moving averages. And here it is here, the similarities between the actual AD line for the NASDAQ 100 and the 30 EMA moving average of the NASDAQ Composite AD line is quite uncanny. We can consider the 30 EMA in green for the NASDAQ Composite itself to be indicative of the NASDAQ 100 AD line. So if that's the case, there's a lot of room to run to the upside for the NASDAQ 100 big fat cap megatechs, and conversely there's a lot of room to move to the downside also. And I just had to show the U.S. Treasury yields from the 1 month through the 30-year. Look at the 1 month Treasury yield at 5.39, and then the 3 month U.S. Treasury yield at 5.26, and the 10 and up is right around the middle of 3.5. So that's really incredible. Investors, traders, everybody's just pouring into these short T-bills, especially this 1 month, because of the debt ceiling crisis that is on everybody's mind and making them crawl the wall of worry. And the 2 to 10 year yield curve has hit a milestone in the form of the simple moving average 12-month here. This is a monthly chart, and it just absolutely nailed it on Friday at 0.48, and the yield curve is at 0.48. And this was absolutely incredible. It almost nailed 1.0 down here around the beginning of 2023. So hopefully it can get back above that 12-month simple moving average and start heading up and get this yield curve to steepen a lot more than it is already. This is still really bad. The ROC 1, ATR2, and PPO Extreme chart Shows the ROC 1 went past its positive volatility line, the top of the green zone at 1.0 positive, and it nailed the euphoric state line again at positive 2.0 and then backed off a little to end at 1.85 positive. In the last couple of days, there's been some tall candles, so that's why the ATR2 is above its volatility line at positive 50, and the PPO Extreme ended up at 2.815% above zero, and the stocks above their 20 simple moving average in the S&P 500 moved back above the equilibrium line at 50, so it's in the green zone. Needs to get back up here and form this kind of complex pattern up here. Then we really know we got something good going on. And the S&P 500 AD line, you can see in the thumbnail, has been having some whipsaws above and below its 21 EMA signal line in red a couple of times. Now it's back above it, and it's bounced off of this support and resistance line in dashed red here a couple of times and break down below that dashed red line. It's kind of in AD no man's land there. Next stop is this falling peaks trend line, that's support and resistance, also in dashed red here. And it looks like there is a floor of another support line here of some valleys here. Big huge whipsaw back in here. And let's see if that can coincide with this and stop some sort of horrible downdraft there. If it happens, that is. And the MACD is below zero slightly at 15.954. Wants to get back above its signal line in red here. And the RSI 14 did make it back above 50. It's been going up and down above and below the 50 equilibrium line, sort of like the AD line. It needs to get back above its 21 EMA signal line in red though. And the on-balance volume showed some running to the exits a couple days ago. Had a nice bounce up for Friday. The S&P 500 support and resistance levels big board chart shows the gray areas at the 20 simple moving average and the pivot point. And price ended up the aftermarket hours end of day Friday at 41.33. So to the downside is the daily conversion line, and then we go into the 40-100 zone for S1, but right above that is the weekly diamond bottom extension perfect uptrend channel, which made it into the 4100 zone. And then underneath S1 is the daily baseline at 40.93. To the upside is a big jump up to R1, right around the top of the range, 41.64, and then R2, and then the daily Bollinger Band upper band, and these ongoing supply lines that need opens above them and closes above them for Monday to get qualified. And up into the 4200 zone is the upper Stark band at 4203.96. And this does not happen too often. The weekly high channel 3 and the daily high channel 3 are right on top of each other, and they've been that way for a few days. S&P 500 daily AD line, NASDAQ 100 AD line made it back above their 21 EMA signal lines. And we'd already discussed the ROC 1 PPO and ATR2, but you can see that ROC 1 is at 1.85 and pointed up. ATR2 is above its volatility line at 50. closed at 68.20. PPO Extreme is at 2.82% above zero, so that makes the level 5 for 2.99% to the upside target, and the PPO level 6 down there at 1.67% above zero. And the New York traditional McClellan breath oscillator to get back to zero really improved on Friday. Marty McFly moment there. It would take 676 advancers over decliners to get back to zero. Quite an improvement from the previous day here. Have a great day.